But I'm going to pass on to you now, Rob, just to go through the topics. Cool.
Awesome, thank you. Yeah, let me hope that I have control. Let me just test that out. My kit is just.
Yeah, I can see your.
The right way.
I can see your mouse wiggling, Rob.
Fine. Okay. Yeah, perfect. That looks like that's going to work. Great. Okay. So yeah, this is what we intend to cover for this session. I'll talk briefly about what operational resilience risk is to us and to others. Talk about some things that, especially during this year with all the regulatory changes that have been going through, other firms we've been working with, other clients have been telling us is difficult, and share some thoughts on that. Gavin and John will talk about keeping track and building capability, and maybe, depending on time, a live demo of things. Again, depending on time at the end, we'll include some time for Q&A. What we won't get to, always good to tell people this at the start, is detailed information on risk management frameworks and theory. There's clearly enough out there. Very happy to connect on that after the chat and talk to you about that one-on-one. And we probably won't also identify specific answers you might be after for your firm. Today's kind of more going to be about general topics and general hints and tips that we have picked up upon. I thought I'd start with just taking this from the Bank of England's financial stability site, the definition of ops res risk, so the ability of firms and the financial sector to absorb and to adapt to shocks and disruptions rather than to contribute to them. Meaning then a couple of things. There's a wide range of sources, obviously, that people talk about and consider. So physical attacks, outages, hazards, all that sort of stuff. Business continuity is a big topic in this area, so that our critical operations can continue whenever something nasty has happened, and disaster recovery, so that we're getting our whole organisation to recover from the event. And then, according to the FCA handbook, according to DORA, for those who are regulated under EU, firms need to identify our important business services, set tolerances within which we need to continue operating after disruption, and then map those services and test our ability to continue operating. So I'm sure that isn't new to anyone on the call. Why does it matter? Here's a particular example only from 2 years ago. I won't name the firm, but if you Google it, you'll find the firm. One outage affecting a UK major bank. All branches, a significant proportion of their customers were affected. Some impacts lasted for months post the event. And the proximate cause was that after a data migration, the new platform then experienced technical failures, which caused that significant disruption. The regulators and the firm themselves basically said it arose from failing to manage change adequately and failing to manage the op risks that arise from outsourcing arrangements. So that's a kind of why it matters. Why it matters now, depending on who you're representing on this call, there's two big areas of impact that are both underway at the moment. One is that the UK FCA has an implementation period for some rules from 2022, where by now we should be a long way along that route. We should have mapped and tested and be able to confirm we can remain within impact tolerances for our services by March next year. And for those regulated under the EU, the Digital Ops Resilience Act, DORA, entered into force early last year, and by 17th of January 2025, we are to have implemented the requirements of DORA. For those who are counting days, I'm afraid today leaves us 100 days left of that implementation window, so we are getting towards the end of all of that. So I've taken DORA as an example. I won't go through all of this, you'll be pleased to know, but this is how we break down, or how the legislation breaks down, what are the requirements under the Ops Res Act for Europe. So there's many things, obviously, that won't be unfamiliar to people here. Risk management, governance, life cycles, identification of risks, dealing with incidents and reporting of incidents, testing to make sure that we're at the right level of capability for the firm, and oversight as providers, and managing of those third parties as well. As one client had said to us when we were talking to them earlier on in the year, so essentially we should be doing all of this already as part of our usual risk management and oversight. All feels like a little bit of a high hurdle, but yeah, there's not much in here that should surprise many of us, I don't think. So then, talking to you about what other firms have said they find difficult. The reason I put this slide here is it depends on the risk that we're trying to manage for. So it depends on you and the risks that you face, where you're going to focus, and the judgment that you need to apply. I have thought through the kind of DORA setup and the UK regs setup, and I've just got some notes on 5 areas that people over the past sort of 8 to 10 months have been raising with us at Tory that they find difficulty in, and then some thoughts on that. So the first one would be being proportionate. I think both the FCA regs and the DORA regs talk about applying a proportionate approach to things, and that obviously requires a whole bunch of judgment. We need to be thinking about the complexity of the dependencies that we put on suppliers. We need to be thinking how important the relevant services are, and we need to be thinking what the impacts are, both on the services we supply at our own level and at any group level, if there are outages, if there's events that happen. So what does that mean? I think it means one endpoint doesn't fit everyone. So there is judgment all the way through this. We've had multiple firms ask us kind of, could we tell them where they need to stop as such? There isn't a stopping point that everyone needs to get to. The best advice we can give people is make sure you've documented your rationale for where you've stopped. Why is your risk assessment showing activity as a certain level of importance? Make sure it's been through governance and through testing, so that's enough senior people, different senior people who are testing and strengthening the thinking that you've got documented. And when you're documenting that testing, one thing that we have used at other firms is to get people deliberately to cross-challenge, so they're not mocking their own work and saying it looks good enough to me. Get different board members to be testing the materials of other board members. Partly, of course, they enjoy that. No one can resist getting into that as content, but it does actually strengthen bringing expertise from another domain in, so that people can demonstrate it later. On that point, I've put, is your material evidence? Do you think, especially if it's things like meeting minutes, think whether they are actually showing in written text the rationale that you've used, how they've been developed, options that you've rejected, the challenge that was applied. We have worked with some people who kind of only realise late on that board meetings are written up in such a kind of cursory way that actually they can't come back and be relied upon as evidence later. What else? So if I use again DORA as an example, there's some processes that we've talked to clients about being downstream as such. So, if we think about risk management, a lot of people will start by thinking, must identify, must categorise, must work out mitigations for risks. There are some kind of Cinderella processes and components that people are only turning their attention to now, or that run downstream. I've kind of highlighted 4 of these. These 4 appearing again on this slide, they remind me of a quote that always used to come up when I was back doing A-levels some time ago. One of my teachers used always to say, if a thing's worth doing, it's worth doing badly. What I'm meaning in this context is if a thing's worth doing, we're going to learn from trying parts of it. So we need not wait until we're perfect with a risk framework before we then invite audit to come along and to test parts of it. And similar for the other components. So how can we help here? Go and commission an audit of part of the framework. One of the requirements of DORA is that the framework is audited. Go report on that, go review on that, even go commission audit and bring them in. Lessons learned, learning and evolution is a part of all of these frameworks. So consider simulating lessons learned. Maybe pick an incident you wouldn't have to report to regulators. Run that through, wargame it, work out who you're involving, how you're involving them, what governance needs to apply, how you turn that into action plans, how you achieve the action plans. In terms of reporting of major incidents, DORA gets pretty prescriptive on this, as many on the call may know if they're EU regulated. The standards are out there. They've been out there for a while. In fact, the templates and the data model to some extent are also out there. And if you look at the numbers here, the initial report of an incident to the regulator has 25 things that they're asking us for. Interim reports then get more detailed as well. So there are tools out there to help. Give that a go. It's of course going to show things when we realise there's data points that we don't have to hand. And I would also recommend the FCA website. You can get these from. If you've not completed the OpsRes questionnaire, the cyber questionnaire, there are self-assessment tools which you can complete, which help you understand levels of maturity and point to places where we still need to build capability. You can access those. I think it requires talking to your supervisory contacts, but you can see that at the FCA website. What else? Look, we should be well past this by now, but it's worth me just saying, do we have to? We have had some firms talking to us who are wrestling with the idea of which entities, which subsidiaries need to take action. Are they counted as suppliers of critical services and covered by the Act? Is the business the firm does covered by the Act? So we need to care about the suppliers that supply into us, places around our group where we're supplying services across into each other, and also customers that might designate us as a critical supplier. Some firms we've talked to need to be thinking about enhancing their own contractual terms with customers according to whatever they're happy to guarantee in terms of DORA and other compliance. Should be past that by now. We're well into the implementation period. Knowledge is something that we have talked to others about again. So this is taken from DORA, but clearly knowledge of the ability to test risks, the ability to understand ICT risk is important around the management body. One of my colleagues in the GRC function had suggested bringing on a board member as an ally. Find somebody who has a particular bee in their bonnet about ICT risk or about risk management. Go and help them be your ally to influence the rest of the board. Again, judgment applies here. Words like sufficient, words like understand, and specific training. The thought process we've been through and the level that we want to stop at. How do we know what attestations do we want to get? What job descriptions does it need to find its way into? There's a lot of judgment about the level that we want to stop at here again. And then the fifth brief thing I wanted to talk about is just testing. It's a key thread throughout the Act, throughout both of the Acts and the regulations. The FCA handbook has some information on that. DORA has a lot of information on that. There's a heck of a lot of really detailed suggestions in all of this about technical testing, about process testing, about wargaming that we might want to do. So there's a lot of stuff there. The FCA handbook does have particular information on scenarios that we choose to test. And again, we should think about what evidence trail we build. In that handbook, scenario tests, the FCA is asking us to have factors that bite as the test continues. So it's not one scenario, it's a scenario that gets more complex and harder to deal with as we go through to increase the resources that we don't have access to. They also talk interestingly about response plans, not just recovery plans. Obviously, a lot of firms think, right, my service has gone offline, I must recover it. The FCA also asks us to think about areas that we can put in as interim actions that buy us time to do that recovery. So response plans and showing that you have tested your response plans is, I think, an interesting area that we don't always see lots of people getting straight into. Including third parties in testing to understand capabilities to meet your impact tolerance. That's a key thread in DORA in particular. And then the lessons learned point that I mentioned before, finally. So being able to demonstrate in written form where we've tested, the lessons that we've learned, and then action plans that we've then completed and taken all the way through to improvement. So I know that's a whistle-stop tour. We're keeping it kind of light, brief, and quick, I think, today. So that, I think, is all that I was going to talk to about what firms have been telling me during the year. John and Gavin are going to pick up and take through the next section.
Thank you very much, Rob. That's really interesting. Lots of very useful tips there. What we felt would be interesting is, obviously, with most of the regulations, they're all encompassing, but the key part of a very vital part of all of them is IT systems. And what we regularly see is a sort of disconnect from managing risk by the firm and what happens within IT. So we thought it might be useful to sort of talk a little bit more about a risk framework that could help underpin the regulatory frameworks.
Yeah, so obviously DORA is the hot topic at the moment, but there's lots of reasons you might want to actually follow an IT risk framework, an ICT risk framework. It's not just compliance. Stakeholder confidence is a big thing. If you're acquisitive or you're in the process of being acquired, due diligence is another big factor in a procurement. You don't want to come a cropper because there's no ICT risk management at all, and there's loads of issues which can scupper a potential deal. But it also protects your assets. It really protects your reputation. If you're in the public eye, or there is potential for you to be in the media and that be reputationally damaged, it can be a very costly issue, not being across your IT risks. And also, it's a cost efficiency. If you're managing the risks and they're being highlighted to the senior board members and the senior management team, making informed decisions about your environment is really key. Without that visibility of a risk framework, you really don't know what the issues are, and you can't make informed decisions about that. So it really is quite important.
But I think and this slide's quite helpful, because what I sometimes struggle with is how to visualize how the IT piece fits into the regulatory piece. So we put this slide together. It's going to be a bit complicated when it's finished building, but hopefully this will show how it all ties together. So obviously all organizations have their physical assets, virtual servers, endpoints, and I'm sure every one of you, you're watching on one of your endpoints. So there's a lot of IT technology out there. Then you've got your layer of security, and many businesses have lots of different security systems. Often when we're talking to organizations, they're left sometimes confused as to whether actually they're actively managing their risks, because these security products are designed to look at very specific areas of your technology. So obviously to actually be able to understand your true level of risk as an organization, you then have a risk framework that sits above it. So in other words, the various different security products are informing these different aspects of risk as to what the level of risk is. And then over the top of that, you have your regulatory frameworks. So, in this example, we as Wavex like the CIS framework. It's open source, it's global, and many thousands of businesses contribute towards it. So it's very mature and very capable. But this slide sort of hopefully shows you how from the physical asset, how it all rolls up into your regulatory framework.
Yeah, so as Gavin mentioned, we at Wavex like the CIS framework. It's good in that it's very prescriptive, and because it's open source and cross-vendor, you get lots of and it's prescriptive. You get a lot of information on how to configure things at a very granular level. So it provides you the overall controls that you need in place to protect your ICT estate, but also the configurations that need to be applied. So it's quite easy then to benchmark where you're at against the different controls. So for example, a secure configuration, there's an Intune configuration, there's a Windows 10, Windows 11 configuration that can be then applied. So us as the IT provider can apply those configurations and then feed up into the IT risk framework to say, okay, you are secure in the secure configuration. And it's not as encompassing as ISO 27001 or a SOC 2. It's about finding the right balance between what you need to protect and be compliant, and not investing as much. You can chuck a lot of money at it. So we find the CIS framework is, because it can be modularized and you can pick and choose the controls that you need to be compliant with those frameworks. Its flexibility really sits well with managing your risks. So as I mentioned before, there is overlap with DORA. There's lots of different key aspects of the framework which are called out. Continuous vulnerability management obviously is a big one. Anything from even cyber assurance that are asking for continuous vulnerability management. Incident response is a big one, but then you've got you know, have you got inventories of all your assets? Is you've got data protection? I mean, I don't want to read them off, but the point up here is that there is a lot of synergy in allowing us to use the CIS framework to map to DORA.
And using the ADOL term, here's one we've prepared earlier. I thought it might be interesting just to sort of change it up a bit to show you what a method of managing these internally might be, because as I said before, we often see a disconnect between managing the regulatory compliance and what IT is delivering, and we feel it's really important to try and bring those two things together. So I'm just going to share something else. So this is a sort of risk management framework, and all these tabs off here, all those different types of security products that you saw on the other slide, and they all feed into the risk framework slide. So a business can look at the main controls across their organization and immediately see where risks still exist. And this helps execs that might not be as familiar with some of the security technology actually understand the level of coverage and where those risks exist within the business. And the way we would tend to manage that, if a risk is identified, we would then make sure the customer acknowledges the risk. We would always encourage some sort of board review of those risks, because obviously IT risks, if untreated, can have very serious consequences to the organisation, and then when it's resolved. But as John mentioned, the flexibility of the CIS means some of those, depending on what type of financial organisation you are, some of those risks might not be pertinent. I mean, you may not have any servers. Lots of organisations now are just 100% in Office Microsoft 365. Therefore, some of the risks that would otherwise be here are no longer an issue. But I just thought it might be interesting looking at how that might all come together. Let me just jump back into the slide deck. Right. I assume that's all up, is it?
Yep.
So obviously we're nearing the end, so we'll just do a quick summary of sort of what you could do as possible next steps. We've separated these into if you have more sort of questions about the regulation, how might you take that forward? And also if you have more questions about more of the ICT side of it, how you might take that forward. And hopefully we'll have a few minutes at the end to answer any questions. If you want to start thinking of your questions, I believe there's like a Q&A button on your screen. And if you post any questions to that, and by all means start doing that now, we'll try and answer those at the end. And if we can't answer them, we'll send out some answers later. So over to you, Rob.
Yeah, thank you. So this slide effectively just illustrates the Torii approach to resilience risk and how we approach this with some of our clients. I've talked about some of the aspects on the left-hand side, the business services, the risk management, the learning, the lessons, the culture. We then work with clients to help them understand and prioritise their investment budget and their projects to tackle these things and address vulnerabilities in the right way. So I won't go into more detail here, but you can find us at toriglobal.com. Very happy to talk to anyone who wants to pick that up and talk more about risk.
Thanks, Rob. And a little bit about the next steps from WaveX. You know, if you're interested in an ICT risk management platform or learning a bit more about how we do it, the main steps for a new engagement are to assess the requirements. You know, what frameworks are you needing to be compliant with, and what level of risk are you? You know, are you risk averse, or do you have a low appetite for risk? And then we identify the risk. We'll do an IT audit, look for what controls you have in place already, what technologies you're using, and then from there we can do the gap analysis, essentially formulate a plan, a roadmap to mitigate those risks. So That's the way we do it. And then obviously, because it's important to review those risks on an ongoing basis, and that's an important part of risk management. The general cycle is then to have an ongoing engagement to look at the risks again, ensure that they are you're still compliant, and that any new risks that might appear on the IT landscape are dealt with as well.
Thank you, John.